happening, people? What is going on, guys? Just getting a couple of things sorted out on my end. We can start the stream. I hope you're all well tonight. Awesome. What's good? Market is wild. Yeah, you could say that. So we go to 55k or what? Good evening, everybody. Good evening, wherever you are in the world. G-Unit, what's happening, bro? Sack Trades, what's good? Matem, George Patterns. All the pattern watchers rolling into the stream. What's the music like? I don't even know what it sounds like. Can you hear it? Oh, I'm just letting it play out while people come into the live. You don't need to hear what I have to say right now. No problem there, Hot Chops. Too loud for a bed track. Forgive me. All right then, guys. Let me just roll with the flavor right now. So, I promise you, this is going to be a short live. Okay? It's been a long day for me today. Doing all sorts of stuff. So, I just want to give you some key pointers to understand what's been going on so that we can move forward into tonight's session. And of course, not that I want you to trade tonight's session, but having awareness of what we are likely to expect. Okay, so let's get this. That track was banging. All right, and guys, come on then. Let's roll with the flavor. Here we go. All right then. So, firstly, let's have a look at what Bitcoin was, which is this chart right here. And let's have a look at what it's done. So Bitcoin makes the spike up towards this range right here. It was roughly, I believe, it was more than the 45 zone. No, where was it? It was all the way up to, yeah, the 45,600 zone. Okay. Now, I put out a projection. I didn't share this projection. Okay. But I was doing my projections as normal just so that I can align my mindset on where I expect price to end up at. Now, we are expecting a retrace, okay? Now, that retrace at this point in the chart, ladies and gentlemen. So, the high right here was 44,099, and I expected it to have some form of formation up here around the 45,200 zone. Bitcoin ends up at the 45,600 area. So, sort of in line with where we were actually expecting price to end up, okay? Why? Well, the reason why is because of this. As you can see, you've got one push to the low, one push from the lows is right here. So this was the trigger. From that point, they had stabilized the price action in this range. They kept the liquidity contained over the weekend. They were building positions. And then you can see ever so closely, you've got this another push up, but it came straight back down again. Okay, so that was just a little bit of a concerning thing for me. So I was expecting at least two more pushes because this push right here, I didn't really count it as a level as such. Okay, I'm looking for 3 hits to the high. So I counted this area as a hit to the high and I expected them to hit price one more time. I wanted it to at least hit one more time before we could actually make the assumption that they're likely to come down. So from today's price action, they came all the way down towards the 42,800 zone. So it was in this area here, okay, which is the 2 pools of liquidity right there. What's the market doing? That's the question. Okay, now if we look at the price action here, as you can see, if we zoom out again, go on the 15-minute time frame. It was actually on the hourly that I looked at that. 2 seconds. Wow, look at this for a guy. All right, let me just delete that. I've got rid of everything. Okay, then cool. So you can see on the hourly, it's a little bit more distinctive. Okay, but the pushes to the upside were pretty... not so much distinctive, but they were quite notable in the sense where we knew the market maker was showing his hand. So from that move from the downside down here, okay, that was one. I didn't count this one because it came back down into the range straight away. Okay. Then we had this second one here, and then we had the final hit to the upside. So when you're asking the question, how do you establish the 3 hits to the high or 3 hits to the low? You need to see price significantly moving from an area, hardly any retraces. The retrace happens after the vector candles present themselves. Now it is variable, ladies and gentlemen. Remember that. You can see for every attempt by the market maker to push price up, okay, notable volume appears at this area. Then you see this light figures, all these white and grey candlesticks. This is retail traders stepping in because they're buying into the hype that they've missed out on this move and they think it's going to continue. Then the weekend stabilizes price. Market maker steps in again but pulls it straight back again. Then we get the significant push away from the zone. And then it moves up again, retraces, grey and white candles, one more push to the upside, stop hunt rise, and then they push price all the way back down today and recovered the previous vector candle in this zone. Now, in the stream earlier on this afternoon, we did say that if this move was going to continue to the downside, at what point would we expect them to retrace and bounce away from key moving averages? Okay, so this is what we were waiting for today. And as you can see, the price action in this area here, they were whipping and whacking price. Traders didn't know what to do, whether to go short, go long. Their positions were being hit. Sell stops are triggered in this area. Buy stops were being triggered in this area. Then all of a sudden, the sentiment had made traders go and make a run to the downside, and then they instantly reverse price back up to try and take back the vector candle. At the same token, come back to previous areas where they had initially taken out buy stops. Okay, remember guys, you are watching an algorithm roll out. That's what you are watching. If you want more information on that, Google it. Okay, research what a market maker is. What's his purpose? He's a liquidity provider. All right, and there's a particular reason as to why they trade futures, because that's where the liquidity is, where the retail trader in essence reveals his position, because the exchanges themselves reveal that information. The only information that the market maker doesn't know is if you put your stops, if you put a stop loss, he knows where your exit is. Okay, but if you put the market order as such, if you place a market order, he doesn't know that you exist. Do you understand? You know? He doesn't know that you exist. So that's what you got to be aware of. And the only way he knows that you exist in futures is because when you put on leverage, when you use leverage, you reveal your margin for that leverage. Okay? It's like when you borrow money, do you think the person that borrowed the money to you is going to forget that you borrowed it? No. So in this instance, the person you borrow the money from is the exchange. The exchange knows you've just used 100x. And in order for you to utilize that 100x, the market maker can see where your margin's at. Sorry. And this is where the margin is at. We've had a little taste of it today. We're still at $29,390 worth of long liquidations. Now, does it mean every time we look at this chart, price is going to break down completely? Well, there is a lot of build-up right now towards the Super Bowl. Okay, there is a lot of money being put into the Super Bowl, and crypto is going to have its day at the Super Bowl. Okay, does that have any reference to what price can do? People are talking about it's going to drop after the Super Bowl, and before that, it's going to rise. Whatever you believe it's going to do, ladies and gentlemen, your ideal scenario is to be able to exploit movement in the charts. The only way that you can do that is if you understand how they operate price at particular points in the chart. You need to pick an element of the hybrid system and establish yourself with it. Stick with it. If you are new to cryptocurrency or you're new to trading, you've probably got the mindset of you need something to do it for you. Sorry, that ain't going to cut with trading. See you later, bruv. It's not going to work. You will come into this game as it's a zero-sum game, and you'll be providing the liquidity to the trader who understands the way they move price. Okay? This fast, aggressive move to the upside was designed to trigger out all the retail traders who went short. Okay? So check this out. Forgive me for that blinding of the screen, guys. So watch this. Earlier on today, just before this move to the upside, okay, you can see that we had nearly $100 million worth of short liquidations at 50x. And you can see that they simply came all the way back up to that zone. How were they able to move price back up to that area? Because behind every single peak that we saw today, there were buy stops in that area. So they were getting triggered. Remember, the general overview is people are favoring higher prices. Okay, so the moment that the market makers initiate the transition from price dropping to moving back up again. See, just look at this little move to the upside here. That triggered retail traders to step in. Retail trader comes in, buy limits taken, buy stops taken, and it all ends up towards the next pool of liquidity, which is the $100 million worth of short liquidations. Because people were riding shorts today. Look, $99 million worth, so $100 million worth of shorts were opened. They didn't pay themselves, and then they allowed their accounts to get liquidated. Okay? So the guys who use less leverage are in a little bit of luck because they haven't gone near their liquidation point. Does it mean that they won't get to it? It all depends on what happens from now until later. What would price need to do? It would need to hold above the 50 EMA. That's all it would need to do. Excuse me. Yeah? Are we good with that, guys? Yeah? We've got, yeah, of course, we've got tomorrow. We've got Thursday. Things are pretty interesting this week, guys. Now, look, in the stream earlier on, we were talking about the idea that at what point will Bitcoin come back up into this range? Because this is where the buy stops are. Okay? If they come back up to here, there is a good chance that from this area here, we may see some more stops getting taken. Why? Because everyone is buying right now. Crypto is the talk. And remember, guys, there are no indicators, in my opinion. There are no indicators. There is nothing out there that's going to solidify the basis of direction other than market sentiment. That's it. There's nothing out there. Because the only way price can move up towards this area if there are people committing to those zones. The market maker, as the liquidity provider, he can only allow price to move higher and market up higher and build positions against you if you are willing to step in. So what does the market allow us to do? It gets us these indicators, we have signals, we have patterns, you name it. Support and resistance points. Ultimately, we are incentivized to make a purchase, and the market maker is there waving his hand saying, hey man, do you want your order? Happy days. Open it. I'm going to open it against you. But because you're a retail trader, I don't need to worry about you trying to make a profit because you don't understand what profit means. You're just down for holding and you're down for just being greedy. Well, at the cost of your greed, I earn. That's what the market maker is in essence. If you don't want to believe it, Google it, guys. This is no phenomena, guys. This is how the business operates, okay? So looking at Bitcoin's price action right now, we have come and tested the 50 EMA quite wonderfully. This is a healthy drop to the downside right here. We will know if this move is going to be sustained if they can stay above the 50 EMA and trade lightly to the upside. Or if they do decide to break below the 50 EMA, you must be aware of the 5 and 13 EMA on the 1 hour time frame, because that will give you, in essence, the understanding of momentum developing to the downside. So if price action, and more importantly, if the 5 and 13 EMA expand from this range and continue higher, then momentum is likely to bring price back up towards this area here to trigger the buy stops. But remember this, guys, all right? The fast speed of this move right here has been designed to take out all the liquidations for the shorts or for the guys who quickly run for cover, closed their positions, and quickly took advantage of a short. Okay? But they paid the price because they don't pay themselves. That's why price is able to move back up there. All right? Now, coming into the Asian session, guys, you must tread with caution. All right? Asia tends to have this habit of throwing price up and down. So please be careful if you are trading in the range. For my guys who are trading on the higher time frames, and potentially the holders of cryptocurrency, the 800 EMA on the 4 hour time frame is the next point in the chart, which we will understand if the market maker is going to, in essence, trigger more sales, okay? Because it will come in back into the previous point that it sold from, or it's going to activate more limit buy orders, okay? Are the stops going to get taken? So if you look to the left of the chart, you can see we've got vector candle recovery ranges. But the idea is not to assume that, yes, they're going to take all of them and continue higher. They may take a little bit and pull back. Just look at what they did with this candle right here. They didn't even tap that liquidity, man. They just came straight towards the range daily high and then pulled it straight back. That's no good for us, man. We want liquidity. Okay? Now, if Bitcoin can get into this range right here, guys. Now, this range is very important. Why? Because this is the time that they spent trying to accumulate orders in this range. They kept hitting the buy stops, making people commit longs whilst they were building their shorts above key notable areas. And if you notice, it was all being done above the 46k zone. And again, of course, when they broke through the 46,000, it came in on a big red vector candle. So if we come back up into this area right here, guys, alongside the idea of the 800 EMA, because back then that wasn't the problem. It was the 50 EMA that was causing the issue. Now it's the 800 EMA. So this would be, in essence, the second time Bitcoin since December has come back up towards the 800 EMA. If it can achieve that and move back up towards the 800 EMA, then we are likely to see a bigger pattern formation where we will know exactly where we stand if they're getting ready to mark down. So they may not be finished with building longs because they are holding this range. Sorry, building shorts because they're holding this range. Whilst they're holding the range and moving upwards, price action is showing that traders are committing liquidity. Okay? At what point are we going to be running towards these zones? Now, guys, just because there's loads of liquidity here doesn't mean they'll take it straight away. Okay? Just check this image out. This was taken only a few days ago. Now, we saw them eating away the liquidity for the long liquidations. They were eating away it, going and going and going. But then they stabilized and they probably left a few hundred million in this area here. Why didn't they take it? Well, that would mean that all the retail traders going short were in stacks of profit. But they know they don't pay themselves. So market maker reverses back up and takes the shorts. Now, when you look at the shorts right now, it's a different story. It's completely different, isn't it? Yeah? Cool. So for the holders, just be aware of what it does in this area here. On the 4 hourly, the 50, the 5 and the 13 EMA have not crossed over. All right? So just be mindful of that range right there, guys. A clean breakdown below the 5 EMA. Well, then you may need to start paying attention towards any other zones down here because we've got a lot of buy stops right here that could be triggered, and as well as sell stops, sell stops in this area. And of course, you've got the buyers who were entered at this point. If you notice, look at where the turning point happened when the last time the stops were triggered. The last time the stops were triggered here, they shifted out. Now they've come back down into that range, swiped the sell stops and shifted back up again. Okay? Now, what I want you to try and understand as well in light of the book map itself. Oh, look at that. We've just had a sweep. A sweep in the book map is in essence a stop hunt. Now, just to let you know, you see all the variations of the bubbles right here. Okay? These are orders being placed across the 5 exchanges. Kraken, Coinbase Pro, FTX, Binance, and Bitstamp. All right? So they're just clustered all together. When we zoom out, we kind of have a good idea of where the liquidity is currently sat in the order book. There is a lot of liquidity at 43,800. Yeah? About, how many is that? It's about 51, 101, 200. Yeah, about 252 Bitcoin orders. We come out again. Some liquidity at 41,800 maybe. But I'm looking for other liquidity pools. Here we go. There it is again. Well, would you look at that, ladies and gentlemen? Would you look at that? Bitcoin's orders at 30k, still at 428, but it's coming down. All right? A lot more liquidity at the 40k range. So just be mindful of that. Yeah? Just keep an eye out on the fact that there's liquidity down there. If you have the book map, the idea in principle is, you see how it's red? This implies heavy liquidity. That's commitment. That's what we want to see. And these are orders beyond this white line right here. These are orders that are due to be filled. Now, because I've clustered the orders together, it looks concentrated. But we can see there's a lot of liquidity. What you want to be aware of is this. If this zone starts to turn red, that's what you want to be aware of. Because over the course of the today, they have been increasing these orders. Right? These were like 35, 45, 85. Now they're moving up quite higher. So we got 161, 77, 97, 86, and 122. Okay? So the idea is, if this starts to get darker, it would imply that the imbalance, which is happening right now, the limit buys are taking control at this current point in time right now. That's what you want to try and get into your minds when you come to the charts. You can look at what they have done so that you can understand what they're likely to do next. But in order for you to understand the end result, you need to be observing what they're doing right now. Does it fit with the narrative of what they have done and what they are doing right now? Okay? What's important is this. The UK set the scene today. If we go on to the 15-minute time frame, the UK set the scene with this stop hunt rise. Well, the Asia coming into the Asian close. And then they came down and the UK Brinks drops price. And the US session followed through. But you got to remember, the Asian session initiated the movement in the first place. Now, market makers operate between different time frames, guys, okay, and different places in the world. There are three types of market makers. You've got the guys in Asia, you've got the guys in Europe, and you've got the guys in the US. Are they against each other? In principle, I wouldn't say they are against each other, but as liquidity providers, the whole point is to be a liquidity provider, okay? You've got different flavors of market makers. You've got Coke, you've got 7-Up, and you've got Fanta. It's no different with market makers. Ultimately, they quench the thirst. Principally, they are providing liquidity. Ah, it fits kind of, doesn't it? You know, 7-Up, Coke, you get it? Liquidity, money, drink, quench the thirst. Anyway, you get the idea. So, let's have a look at good old ETH gang. How many people in here are actually trading Ethereum as opposed to Bitcoin? Where are the Ether followers? You know? If crypto is 24/7, how come they have different regions? Well, because different places in the world at different session times. Yeah? Different sessions. Come on, Tino. BitBoy said altcoin season is on. We are all going to be rich with micro cap gems. He said it, so it's true. Well, let's have a look at some altcoins, ladies and gentlemen. Okay. Ether gang. Mad love and respect to the Ether gang. Listen, if you are new to the channel, ladies and gentlemen, doing a bit of housekeeping, 377 of you like the stream, but 1,800 of you are present in the stream. I don't understand the disparity between the viewers and the likes. What does that mean? I'm joking. Be sure to subscribe. If you are new to trading, these indicators are free. HighBlock is a paid subscription. Go check it out. Google it. Go and have a look at what they do. Okay, so you can understand how to utilize it. I talk about it all the time in the streams. All right, Bookmap is also a paid subscription. Go and Google it. Check it out so you can understand how it operates. I talk about it in the streams. But if you just want to sit and talk hardcore price action, be sure to subscribe because we stream 3 times a week, 2 p.m. GMT and 10 p.m. Anyway, that's all the housekeeping stuff done, out of the way. Happy days. So Ethereum. Now, if you notice, Ethereum has actually come back up to the last point in the chart where it was significant movement by the market makers to spike price higher, and then they reversed it again. Funny how they've come back into that same zone and dropped it back down with the presence of the vector candle nearby, and they are, in essence, testing as to whether or not the 50 EMA will hold in this area, which is the 13 EMA on the hourly, and more importantly, the 200 EMA on the 1 hour time frame. Sorry, the 200 EMA on the 15-minute time frame is the 1 hour 50 EMA. So we're at a key point in the chart right now. Ideally, I want to see Bitcoin drop or hold and altcoins make their move. Okay? But until it happens, we won't know. Okay? Now, Ethereum trades a little bit more superior to Bitcoin. Why? It respects the levels. It respects the zones. Look at this. They came down into this zone right here. They came into the psychological high, and then they bounced away from it. Where was that? What did we say about it earlier on, guys? We said that there is a big confluence area here. They coming into this zone right here. There's a good chance they're going to bounce away from it. We said it in the stream earlier on. I welcome you to go and watch the last stream that we discussed, that we did earlier on. What am I chatting about? Okay, let's have a look at some altcoins. Here we go. Super has been pretty super. There you go. That's a nice little move right there. coming back up towards this area here. Why? Because that's where traders buy. Retail traders buy at the highest point. Yeah? And they can only buy at the highest point when someone is selling to them. Good old Mr. Market Maker. He's the guy who sells from here, and retail trader is the guy who buys right there. Okay? Which one do you want to portray yourself as? Do you want to trade like the retail trader, or do you want to trade like the market maker? You may not be a market maker, but you can behave like one. Yeah? Ask yourself the question. What kind of style of trading are you going to deploy? And that's going to make a lot of difference. Once you've made a decision, come to understand the nature of how they do things. Cadena. Pulling back. Here we go. So there's this, in essence, this FTD style play right there. All right? They've induced the traders to go long. They make them believe they're buying the dip and they've bounced away, but it's not following through. That's a cause for concern. So this area here, this vector candle right here is going to reveal as to whether or not they will continue higher. As long as price maintains itself above the 5, the 13 and the 50 EMA, we understand that the momentum is looking to go higher. But it's all based on who's going to be buying and who's going to be selling. Because if they don't have people interested to buy, and they will be aware of that by the limit buys and the limit sales that are present in the chart, that is when the market maker will shift out of the zone. It's all about sentiment. Right now, everyone is pumped about altcoin season. So people, of course, they're buying. Why is the case that they're actually pulling back now? It doesn't make sense, doesn't it, guys? You have to approach this counterintuitively to understand it. When someone buys, someone has to sell. It's the basis of how the order book works. Okay? That's how it works. That's the concept of zero sum. Because when you lose, someone wins. That someone's the market maker. It's not the guy that lives 2 doors away from you. But likewise, when you win and the market maker loses, he does lose when you win. Why? Because he's given you money to open your trade. Now, whatever liquidity you match up with it, okay? Market maker ain't interested in small orders. That's why we have leverage, so that it can match up with the order books. Why is it on this chart right here, ladies and gentlemen, that we can see it's always 25x, 50x? Why is it not an obscured number? Like 3x or 2x, because people ain't trading with that sort of money. They're trading with borrowed money that the market maker is aware that he has to give as liquidity. And Binance charges you, and then Binance gives the fees and cuts to the market maker. It's a big business, guys. That's the nature of it. Beta, let's have a look at beta. Pulling back, not interested in that, although it's come back up towards the moving average and it's aggressively pulled back down again. Be careful with coins like this, guys. Look, its nature is spike up, come down, spike up, come down. Just proceed with caution with these sort of coins. Mana is doing very well. Okay, let's just pull that zone. Oh, man. Let's have a look. So Mana's coming back up. So that's good news for Mana. So we've got the night. Look at this confluence. This is what you're looking for, ladies and gentlemen. Okay? Based on market sentiment, based on the idea that everything is favorable and that things are trending upwards. Okay? If the sentiment is there, you can exploit it. But just don't be the person that sits through the sentiment and then is still the same person holding on to a position when the sentiment changes because you're fixated on the first sentiment. Okay? Right now, price is reverting back to the 50 EMA, tested the psychological high, broke above the daily open after trading below it. What's next? The next zones of liquidity. Where are they? Look, key point in the chart. Is there a reason as to why they come back to that point last there where they last sold from? And they did exactly the same right here. Why? Because that's where people committed buys. So the market maker can build his shorts from that zone. It's the best place for him to build his shorts. Now he's trying to work his way back up towards that zone. Okay, now if he successfully breaks that zone, he is likely to try and push through to the areas. Now you can see they've held the M2 pivot point, but remember we are finishing the day in the next hour and 20 minutes or so. All right, so just be mindful of that. So we'll have a new daily candle printing and these M pivots will change position. So from this point now up until tonight, 12 o'clock, they've confirmed the M2 pivot right there. So we are likely to try and see them work their way towards the M4 zone. Okay, but look at the time we are in the market. It's the dead gap time now. There's nothing happening. Yes, crypto is operating, but it's not doing much. Okay? It will be moving, in essence, and light volume. So that's where the volatility will come in. All right? Let's have a look at Sand. Sand's done a great job. Look at that. Test of the range daily low. Bounce off the psychological low. Shift away. Come straight back into the last point where the sell stops were triggered. And they triggered them again. Use their liquidity to build longs and close the positions on the way back up because they had all ran for the shorts. You see why it's important that you pay yourselves, ladies and gentlemen. Someone said earlier on that paying yourself is terrible advice. Well, no one went broke taking the profit, bro. You know how it is. What else have we got? Is RND, our render token, dead? Let's have a look. Is render token dead? Firstly, we need to get render. Where is it? Can't even see it. Where's my Twitter gang? Where is my Twitter gang? Hold on. Render token. Look at the time I've wasted. Look at that time I've wasted. All I needed to do was just do that. Crypto. There we go. Is it dead? Well, look, man. Why would you assume it's dead, bro? You know, it's trading away from its lows. $3.50. Got liquidity up here. It's got a lot of resistance in this zone, but this zone, in essence, is a nice range. Check it out. Look at where the orders were being placed by traders. Okay? Market maker has, in essence, worked this range, and it's all happening in between the $4 mark and above the $3 zone. So what do you think they're preparing for? Break it down. Take another line and go down to the $3.50 mark. What do you think they're preparing for? They're preparing longs or shorts. Where do you see them hitting more of? Are they hitting the highs more, making you believe it's going to go higher? Or is the market maker trying to mark his shorts at the highest possible point whilst making you believe it's going to continue higher because he can't open a short without someone in the presence to buy it? Yeah? And how does he do that? We trigger these movements to the upside. Indicators, bells and whistles blaring off. You get the idea. What do you mean, Paul? Okay. Tino, you can just start by typing the ticker. No clicks needed. It's true. Can you look at Bitcoin on June the 16th? This month. This month. What are you chatting, Tina? You see what I'm saying? This is why I'm going to be ending the stream soon. Sit tight. Bitcoin on the 16th of June. Are we going back to... Let's bring up the 4-hour time frame. I'm guessing you are making reference to... Here we are. Ah, okay, I see what's going on here. 16th of June. Okay, some people are making reference to this. Okay? Right. So, Bitcoin is hitting the 200 EMA on the 4-hour time frame, which is the 800 EMA on the 1 hour. So this was the 800 EMA in that zone. Okay? Now, people are making the assumption that Bitcoin's going to come back down from that point because it looks like it's doing that business to the right of the chart over here. Is that the case? That's what people are believing, yeah? Fair enough. What's going on with this computer, man? I'm going to break it. I really am. I'm going to put it in the bin. I'm sick and tired of it. It's because I keep running the... Anyways, never mind. Yeah, guys, please forgive me, man. I just need to get this sorted. Here we go. What's it doing? Okay, then. All right, I'm going to put the laptop in the bin, ladies and gentlemen, because there we go. I'm not going to put it in the bin. Happy days. I keep my computer on all day, so I can appreciate if it's feeling a little bit tired. Anyways, so the gentleman asking about June the 16th. Well, quite frankly, what you've got to try and remember is this. What happened then is irrelevant. In my opinion, it's irrelevant because people can't make sense of uncertainty. Okay? People can't make sense of uncertainty, so they have to get themselves some element of guarantee. Everybody looks back and they say, past performance is not indicative of what's going to happen moving forward. All right? Every day in crypto, it changes. Okay? More people are putting different money in. The total market cap chart itself is dictating, in essence, that we don't have new money coming in just yet. Okay, and that's self-explanatory with the way the total market cap is looking. So this is for everything until we break above this high right here of $3 trillion. We are still dealing with old money, principally. But how do we not know that new money is going to push it back up with the intention of making us believe that new money or old money is actually pushing price up? And then when it comes back up towards this area here, new money is in the belief that new money is coming in. So people commit to the charts and then they pull it back down again. I guess that is the anatomy and essence of an all-time high. Make yourself believe that people are actually buying into it. New people are stepping in when it was the old people that sold off and marking it up higher to get positions against those who are trying to grab it to the all-time high, and then it reverses back. Why? Because the liquidity is committed at the top end of the range. Because why? Retail traders buy at the highest point and they sell at the lowest point. Ladies and gentlemen, I said it was going to be short. Be sure to subscribe and catch up with us tomorrow at 2 p.m. Mad love and respect to every single one of you peoples. Be sure to hit us up in the Discord. Make your way over there. Happy days. All right. Take care of yourselves, guys. Have yourselves a wonderful evening. Good night.